Just give me that link, the YouTube. Hey, Eduardo, how are you? I'm fine. I actually had a decent day. Can't complain. Hey, Ernest, Antonio. Yeah, cop in SLB. I made some major dough in SLB today. DIA, Dick, I think it's hanging in there. It's making me really nervous. You know, I think I'll be a winner, but there's going to be a lot of thrusts and parries in between now and then. I'm not quite sure how I want to play this thing. All right, guys, welcome to the webinar. I'll be starting in just a few seconds. Give everybody a chance to log in. I did put, hey, John Weaver. Nice to see you again, John. You're a glutton for punishment. I did put the strategy PDF in the chat box. If you didn't get it yesterday, this is basically the patterns. Turns out there's a whole bunch of scientific evidence that whatever I'm doing actually has some validity to it. I thought I was just a madman, and then I assigned our team to go take a look at it, and turns out there's a lot of validity to these patterns scientifically. So check out that PDF. I put it in the in the chat box. Let me put it also in the YouTube too. So it's in the YouTube also. Happy says you are a winner. I am a winner today, Happy. I am a winner today. Winner, winner, chicken dinner. All right, why don't we start? So welcome to the second of my 2-day live trade execution webinar series. Sometimes I'm asked, is this live? This is live. The markets are closed. The markets closed a half hour ago, but I'm actually still making money in the aftermarket. My name is Mark Shawson, the pattern trader. Yesterday, I discussed how I make money in the market only looking at price action. So whether it's earnings plays, whether it be whatever the Fed's doing, I don't pay any attention to that. All I'm looking at is price. I'm looking at setups. I'm looking at price patterns. I'm looking at trends. And I'm really looking for risk reward opportunities in the market. Probably the best way for me to talk about some of these things is to, share with you some of the things that, I'm doing, some of the things that, we do through the pattern trader. Let me share with you. This was, no, that wasn't it. What I'm trying to grab this. So this was 2 weeks ago, August 14th. There was a video I made for our members. I think I was here. You can kind of, this is. Of life left in the upward climb here, but increasingly I'm thinking that the indexes and many of the stocks are going to start rolling over. And I include in that battle. This was Zoom. So this was a trade that I showed based on all of the multiple setups and patterns in Zoom. I prepared a video, and then I shared where I thought it was going, that we had this diamond pattern, just like we have in the Dow Jones. And based on everything that I was looking at, I said, put a sell stop at a price level of $100. Zoom was trading at about 109 at the time. And so, I surmised if it dropped to 100, it was going to drop a lot lower. And today, it fell out of the sky. Zoom basically dropped $16. Where's Zoom? Right there. You can see it's trading at $81.20, down $16 and 16% for the day. So, you know, if you got my email 2 weeks ago and shorted it at 100, you're fat and happy. You've made at least 20% on your money. Right now, I'm actively watching the aftermarket. I shorted JWN. This is Nordstrom. I shorted it over $23, and you can see it came out with earnings and dropped about whatever this is, 10, 15% in the aftermarket. So I came in short. I actually suggested to our Pattern Trader Club, this is if you join the Pattern Trader, I said you know, before 4 o'clock, right before the close, I said, JWN, this is Nordstrom, I'm going short into earnings tonight. Basically, I was showing the chart pattern, you know, the double top, the key reversal on the weekly. You can see how neatly it hit the downtrend line and reversed. And I said, I'm going short into earnings. You can see the price level was $23.38. And I just covered my position. I just shorted about 5,000 shares and made about $15,000, $20,000 in about 5 minutes. So here is my, where is this thing? So this again is all based just looking at price action. So here is, you can see that again, this was about 10 minutes before 4. About a half hour later, I covered it and made about 15%. So you can see I shorted 5,000 shares of JWN. I sold short, which means I was betting on the decline. And you can see I sold short at a price of $23.39, and I covered at $20. So 5,000 times $3 and whatever this is, 15, 20 grand in about, I don't know, half hour. And also sold short Twilio on the close, and did a whole bunch of other stuff today. So again, I do this expressly based just on price action. So you can see this is all of the trades that I came in yesterday. I was short. I got out of the Caterpillar, made some dollars there. I went long ConocoPhillips. I had 3,000 shares and got out today at 109. So I made $4 on 3,000 shares today on ConocoPhillips. I have a monster position in a put option on a bet on the Dow Jones going lower. I have over 1,100 puts worth over $280,000. And I have also I added to my position of QDEL. And this was my big bet. So I came in today long these calls. I talked about it yesterday on yesterday's presentation. I bought these call options at 86 cents. And today I blew out a sum at $2.20. I made almost 300% in a day. I made about 80 grand on this position. I came in long 350 calls. A call is a bet on the upside. It's a leverage bet. And I was buying the $38 strike price that expired 2 weeks from now. And bought these about 86 cents and got out of some at $2.20. And I've still got some going into, but this is equal to 35,000 shares. So each call option is worth 100 shares. So I bought 350 calls. So that's worth about 35,000 shares. And today the stock was up about 250. It was up about 6% today. It's one of the leaders on the S&P today. So how did I know about that? Well, we talked about it yesterday, and I'll talk a little bit about that today. And then I went short Twilio on the close. Like I said, I either do something on the opening or on the close. The way Twilio closed, I figured that, you know, I had, you know, a no-brainer. So you can see here are my bets today. I sold 5,000 shares of Nordstrom just before the close at $23. I got out at 20, made a quick 15, 20 grand on that. I have 7,000 shares short of QDEL. I also traded in and out of some put options on the NASDAQ, made some money there. I had some Schlumberger calls, Toll Brother. I went short Toll Brothers into earnings today and short Urban Outfitters. So, you know, it was quite active, probably made about $150,000 today. Now, I don't mean to sound arrogant. I really don't know. I really don't follow how much I win in quantum. I don't really follow the dollars. I look at each trade as, did that trade win or did it lose? And, if it's losing, I just close it out. If it's a winning, I just carry it and try and, be agnostic about either thing. I'm also short some New Zealand dollar, Canadian dollar, and got a small loss on those positions. So that was basically what I did today. Now, my big bet was in Schlumberger. We talked about it yesterday. Maybe I should go back and reference, a trade. And I showed you this yesterday. So a couple of years ago, it's 4 years now. Time goes fast when you're having fun. I did this trade in Facebook. And this is a great thing on how patterns are repetitive in different market environments and different instruments, but patterns do repeat. History does repeat. And so if you understand these patterns, if you understand price action, and sometimes to me, the virtue of doing this, day in and day out is that you build a catalog. Even if you lose, you understand why you're losing, and if you win, then you catalog those winners, and then you can repeat them over time. So you can see Facebook came to about $190 at the time 4 years ago, and then dropped out of the sky in this reverse triangle to about $150. Then put on this double bottom, and then went on, made a new high. And so I, understand the sequence of how this works, that these reverse triangles are not really a reversal price pattern. They don't signify an end of a move. So to me, when it dropped out of here, this represented an opportunity, and I seized on that opportunity at the time. You can see right at this key reversal, right into this double bottom low, in Facebook 4 years ago, I bought the stock, rode it up, made about 6 figures on that move. You can see that it then came back down. And when it came back down and did this key reversal, meaning that it made a new low, closed at the high after it put on this bottom here, I kind of thought it would take off from here. So instead of buying the stock, I leveraged up and I bought far out of the money calls. So at the time, the stock was trading at about $160. And I was buying these call options, with a strike price of 180, 182.5, and 185. So that meant the stock had to go up $25 in about 3 weeks that I put on this bet. Otherwise, I would have lost all of my money. And I remember buying these call options, the 185s, for 30 cents. And I remember, getting out of them for $4.50, and I made $358,000 just on the 185 call options. So, to me, I make these leverage bets when I think there's going to be a quick and immediate move. And so these were these bets, some of the bets that I made in this Facebook, the 185s, the 182.5s, and the 180s. And you can see I made almost $500,000 combined with the stock and the call options at the time. And so to me, the setup in Schlumberger looks just like the same setup that I bet in Facebook 4 years ago. So these patterns do repeat. Now, people always focus on, the elite program, which is, this daily email, what the trades are, how much they're winning, how much they're losing. But really what I started the Pattern Trader was to offer a way of looking at the markets, to educate our members. And so, to me, it may sound self-serving, but it's, the function of the Pattern Trader is the information, and you have to figure out what is that information worth. So you can see this is exactly the same kind of rinse and repeat that we saw in Facebook. I mean, it's almost exactly where you had a reverse triangle, you dropped out of the sky, you make a double bottom price pattern, which is simply basically 2 bottoms. When you come to a low, you bounce off the low, you hit the other low, you come through here, and you have this W bottom, This is double bottom. It looks like the letter W. And so if a market is bottomed, then it follows that over time, it's going to go higher. And so yesterday, I look at, again, a combination of patterns and then what I call my insurance day bars. If you bought my book yesterday, I talk about these insurance day bars. And one of the insurance day bars I look at is what I call a key reversal. Simply, I look at where does something close relative to the high and low. So every day we have a bar with the high and low, and this is a daily bar. This is one 24-hour time frame. It's not a 15-minute, it's not 5 minutes, it's a one-day daily bar. And so I look at these reversals in combination with the pattern and with the trend. And so yesterday, this made a very subtle reversal where it kind of closed closer to the high of the day than the low, right into this resistance high. And I just figured, with the combination of all this stuff, with the double bottom, with the way this thing kind of came out of here, that this thing was going to, come out of the gate. And that's exactly what happened. You can see today we were up 6% on the stock, but I bought these options for 86 cents. And I don't know where they closed. I know I got out of some for about 220. So here is Schlumberger. Here's the option chain. And I bought it for 2 weeks from now. So I gave myself some time. So the $38 calls closed at $2, 205. And I bought them for 88 cents. So almost 3 times my money, literally overnight, 300%. 86 cents to $2.05 overnight. So this is how I use price action to look at trades, to look at risk reward opportunities. The more conservative play would have been to just buy the stock. So when you make a play in the options, you have to be prepared to risk all of your money, 100%. The good thing about options is that you can only lose what you put up. The bad thing is you can lose 100%. So basically, I would have said buy the stock here about 37.75 and put your stop loss there at 36. So literally, you were risking less than $2 a share. You're risking less than $2 a share to make who knows how much. And so this is what I look at. I just try and find trades where I can identify moves and identify very small risks for much higher returns. So this was Schlumberger, and you can see that it looks just like that trade in Facebook. We'll see if this goes to make a new high. But in the meantime, I made a lot of money on this trade. I got out of a third of it. And so what I end up doing is I just roll it up. So I got into the 38 strike price. As this thing moves higher, I'll get out of that, take money off the table, and then roll it into a higher strike price as this thing goes. So if this thing looks like it's going to keep going like that Facebook trade, I will keep trailing this with a long position. So this was anatomy of a trade. This is Schlumberger. Doesn't really matter what this trade is. These charts, you can see the last chart was in Facebook, and the play before that was in the NASDAQ, where I saw the exact play in 2015 in the NASDAQ, dropped out of the sky, did a double bottom, one made a new high. And so, the more you kind of understand these patterns and these sequences, this is how I extract, huge chunks of change out of the market. So does anyone want to talk about this trade before I move on? Tom says, as a rule of thumb, if the position is down, how far down before? So every position, the discussion of stop loss and take profit is always a difficult one because every trade is different. And then where you get in the trade is very different. If this thing is going to make a new high, but you're getting in, way up here, it's very different than when I got in down here. So the stop loss and take profit discussion is a whole different thing up there than it is down here. So I try and find trades where the horse is just about to leave the barn, where you basically, are at a, point of an inflection point, and you can see you are right at this area where you banged. It's like keep on banging against that ceiling, and then eventually you're gonna, go through there. So I just felt like there was a lot of white space for this chart to travel into. And now you're starting to see that. Josh says, how far do you estimate it will run? So, the market will tell you, right? So the market will tell me if there's, so to me, every move begins with a pattern and it will also end with a pattern. So, if it shows me something like this, where there's a head and shoulders, or there's some pattern, or there's some key reversal. So the market tells you when to get in and when to get out. So you can see right up here, bumped up against here. And then we had a pattern. We had this double top. And if you were long here and ignored this, you did so at your peril. So basically, I have a saying, the market puts me in, and the market takes me out. If I started seeing, big key reversals like this somewhere in here, I'd say, okay, time to go. So right now, the path of least resistance is higher. How high it'll go, I have no clue. I'm just going to keep following it. And at some point when the market indicates that it's had enough, I'll exit the trade. Now, with options, it's very, very different. Because, when options retrace, they give back so much money. This thing could go down $1 and I could lose 50% of my option value just on a nothing move. So, if options start making you money, and, typically as a rule, if I make 3 to 1 on my money, I start just getting out of some. So I bought 350 calls today, and I just banged out of a third of my position at, a 300% profit. So effectively, now I paid for the position. Now I got out whatever whatever I put in, I've taken out, and now this thing could go to, 0, and at least I won't, lose money. So, with options, it's a whole different calculus. Mark says the 3 bars prior shows a head and shoulders bearish. So not quite sure what you're looking at, but just there's a certain aesthetics and a certain way charts go, and they don't typically just go and then fall out of the sky and just keep going down. Even if this were going to go lower, to me, it has to go higher before it goes lower. It has to kind of come in here, consolidate this high, and then it can go down. But, it always felt, especially when you look at on the weekly chart, and this is why, I encourage you to look at, the bigger time frames, because this, made no sense to me. You can see the coiling that was going on the weekly. So let's just take away what happened today. Or this week. So this is, what you were looking at up until last week. So you had this coiling going on the weekly, where you could see like all the last 3 weeks, just the price range was coiling. And to me, the more something coils, it builds energy. And to me, this didn't look right. Something just doesn't, charts just don't drop out of the sky and do that. This didn't look right. It looks like it has to come back here and at least come back. And then if it wants to crap out, fine. But to my mind, this had to go a lot higher in order to go lower. To me, this is the driving pattern. So, whenever you look at charts, if you look at it as too short, and here it's very hard to tell what's going on. And that's why the driving pattern could be, 6 months ago or 6 years ago. And so this to me is a cadence of higher lows. So this is kind of this large ascending broadening, but to me, it's still, even if it's going to go up, it feels like it needs to retest this low high. And then, if you want to do this, then fine. But I felt like, it was going to come out of this coil higher. And so you also form these traps where, and I think I talked about this yesterday. I mean, there were so many things I liked about this in terms of the sequencing, because effectively what happened was you created this bear trap where anybody chasing these lows, let's say you put your stop loss here or your entry there, and now you're chasing those new lows. And now all of a sudden it comes back, to this, this neckline. Now you create, the conditions for a short squeeze. Now, a short squeeze is kind of a technical term where everybody who chased these lows, if they don't get out, they got squeezed. So you can see anybody who chased these lows now is now stuck and steaming. Imagine if you shorted it down here at 30 and now it's at 40 and 45 and now you can't get out. So in order to go short in the market, you actually have to borrow the stock. And then in order to cover your position, you have to buy it back. So if you're short betting on a decline and now the market's turning where you've got new buyers buying it and now the shorts need to get out, so they're also buying it, you get a huge short squeeze where, it can, go up tremendously. And so this to me, in addition to everything else, set up a condition for a short squeeze where anybody chased these new lows now is squeezed, and now you really set up the conditions where it can go the other way. So there were so many variables that suggested that this was such a good trade. And I mean, I plowed 50 grand into the options, which, could go to, absolute dust if I was wrong. So, it was a lot of money to put into an option trade, but, I've already more than made my money back. Gregor says, I don't understand. I'm new. So Gregor's, again, I don't expect anybody new to understand everything. I've been trading for decades. If you understood it right away, I'd be pissed. But all I'm really saying is that I was able to make almost $100,000 today just staring at this picture, right? I know nothing about the company. I know nothing about the balance sheet, its cash flows, its earnings, how many oil fields it's servicing. I don't know anything about this company. I just made a risk reward determination based on the price movements of this company going all the way back a year ago. So you can see, Gregor's, this was what we call a double bottom, where prices come and make a low. Let me just do it this way. Where prices make a new low, they bounce off the low, they retest the low, and now you have this double bottom. It looks just like a W. And with the word bottom in it, it means that this market bottomed. And if a market is bottomed over time, what is it going to do? It's going to go higher. And so this is what I look at. I look for patterns that tell me where the next trajectory of prices are going to go. I'm not studying the company. I'm not studying the balance sheets. I'm only looking at the patterns, and pattern equals trajectory. You can see once this thing bottomed at $12, it went to 50. That's a 500% move on your money in a year. So if you understand this, this is how you can make 500% in a year. And if you bet on margin or with calls, you can make a hell of a lot more. So this is just the study of price. And so if you understand patterns, and so there was a kind of a reverse triangle here, there was a double bottom here, there was a key reversal, and there was everything that just said this was just going to continue here. And so I made a bet based on all of the collective weight of the evidence of just the price history, nothing else. All I'm looking at is a price chart. And so people think this is magic. They think it's voodoo. They think technical analysis doesn't work. Well, it works for me. Sebastian says, do you expect it to keep going up? I do. Let's see. Yashin, before knowing Mark, I was buying blindly. After the webinars from Mark, my whole trading has changed for the better. Where I was about to lose crazy money, I got rescued. Best Christmas gift I bought last December. So Yashvin, thank you very much. That's a great endorsement. Thank you so much for that. And I'm so glad you're doing well. On this one, I can't see a coil or inside bar, and Mark is uncannily accurate with many of his predictions. Yeah, so this is, not a magic show. Basically, I just look at patterns, and then I try and look at the price action within the patterns. So I kind of dig deep. So once I kind of think I see something, so the market throws you all kinds of patterns all the time. And you got to, kind of figure out which ones are the governing ones, which ones are going to lead to real moves. You don't always get it right. But once I see a pattern, then I start looking within the pattern. And you can see here, made a new low, close on the high, 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 made a new low. So all of these bars are actually pointing in the direction where this thing is heading. Every time this thing sold off, the buyers came in, the cavalry came in, and and that's why I say that, to me, the close is everything. During the day, it's just a straight up gamble. But once it closes, the market tells you, who won the day. It's a war between buyers and sellers. And by the time this thing closed, it went lower, but by the time it closed, buyers came in. Went lower, buyers came in. Went lower, buyers came in. Yesterday, it closed on the high end of the bar, indicating that the buyers were in control by the end of the day. And so I kind of look at this picture of price action, but also this, kind of reverse triangle, if you will, or ascending. This is an ascending triangle. And then, again, it's a lot of it is just instinct. I've been trading for a long time, so that when you hit a certain area so many times, eventually you're going to go through, right? So you have double tops, sometimes you have triple tops, but the market doesn't give you 17 times to get in a position, meaning that, if this were going to turn lower, it wouldn't give you 17 times to get short this stock. So the more it bangs against a certain level, eventually it's going to go through. So to me, the more mature a pattern is, the more time this thing banged against this $37 ceiling, the more it kind of de-risked itself. So I tried this trade several times, and it kind of went and then it failed. And then I said, you know what? This cake looks like it's baked. This thing looks like sometimes you put the dough in the oven and you put it in there for an hour and a half. This was, hour and 25 minutes in. This thing was baked. And so to me, I put a lot of money. It looks like a wild, crazy, risky bet. But to me, this is what I got. I made 300% in a day because of all of these different, things coming together. So the more mature, the more something trades around a certain area, the more it starts de-risking itself. I went short Twilio on the close today. TWLO. So you can see that Twilio, has just been in a huge downtrend. If I put on the weekly chart here, we can see this weekly chart. You can just see it's gone down from $440 to $70. It's just been in this massive downtrend. So once we understand the trend, now we just try and find ways to join the trend and try and understand areas where the risk and reward is in our favor. So you can see that Twilio, is in this monster downtrend. And then, recently it broke this support line here. And now it's trading at all-time new lows. There's like literally no, once it kind of makes a new low, there's just nothing under here. There's nothing to the left. There's no obstruction. And so this was what I call an inside day bar, where you can see the range today, the high and low of today fits within the high and low of yesterday. So the way I look at these inside bars is that this thing's going. It kind of hung out today, but it's just coiling. To me, it's just building energy. And to me, the energy is going to shoot out in the direction from whence it came. So to me, I just went short on the close. Typically I'd say wait, put a sell stop, confirm it, because, tomorrow it could open and, go back up. But, this thing closed right on the low, into a downtrend, into an all-time new low. And I said, I don't think I have a whole lot of risk in this trade. So trading is all about risk and reward. Everything else is just conversation. All this other gobbledygook and Powell and inflation and, Ukraine and all, it's all cocktail party conversation. To me, it all comes down to risk and reward. If I make a bet here, how much risk do I have, for what kind of outcome? And so to my mind, the risk is very, very small. It's really the size of this bar. So I have a $2, $3 risk to make, who knows, $20, $50 on this thing. So this is what I do. I make these bets, all the time. Here's another chart that looks pretty much the same. All of these charts look the same. This is a company called QDEL. And again, just pattern equals trajectory, meaning that once we see a certain pattern, this thing can run, but it can't hide. It's going to get clobbered. May not be tomorrow, but it's going to be. So here's a giant triple top. You can see that we went to these highs 3 times. And so this is what we call a distribution pattern. This is when all of, the insiders and the major players are getting out, and they're never coming back. And so, people have been exiting this company for a long time. And then once, these things have a pattern, then you can see now there's kind of, a sequence underneath here. And now there's another sequence underneath here. And this is what markets do. And this will go down. And then there'll be another, so it's like a staircase. And so this thing is just going to keep on sequencing lower. There's like almost no risk that this thing can go, higher. So I just keep on adding to my short position here. I started shorting this thing at $99 a couple of weeks ago into earnings. And now it's, $16 lower, 16% lower. So, this is trading underneath here. And you can see that there's no support in this stock. So a lot of these stocks, look like this. So I just look for the path of least resistance. Schlumberger, I went long. Twilio, I went short. I'm agnostic. I just want to surrender to the direction of the market and get into the direction of the market. So let me just talk about a currency play just to change it up. This to me is like a no-brainer. This is the New Zealand dollar, Canadian dollar. It's a very choppy trading pair. Normally, I would say don't trade it. But again, I think that this is starting to de-risk itself by virtue of just how long it's been in this trading channel. So again, irregardless of whether this works, it doesn't work, what I'm trying to do in these sessions and what I try and do with the pattern trader is just point out a prism, a way of looking at the markets where I don't understand what the Central Bank of Canada is doing or New Zealand or what's happening in those countries. I just look at this thing. It could be gold. It could be the euro yen. It could be IBM. to me, it's just a price pattern. And, so most people would open up this thing and go, well, but, this looks like a pickup. And for the most part, it has been. But I think buried within this, there's a clear chart pattern that's indicating a pretty clear and a good, I think, risk reward opportunity. So this is the New Zealand dollar Canadian trading pair. And this is a monthly chart, which means that each one of these bars represents 1 month in time. So this goes back, to all the way to 2010. So you have 10 years of history. So most people are trading a 10-minute chart with 3 days of history. This is a chart where you have collectively 10 years. So to me, trading is, if you don't understand the cards you're holding, you really can't understand where the big moves are going to occur. It's kind of like that old poker saying that, if you don't know who the sucker at the table is, the sucker is you. And so, hang on, I just want to check out something. So I was short Urban, and it's just coming down. And it also had earnings today. And then I also shorted Toll Brothers today, and it's also coming down in the post market. So I've made, I don't know, 25, 30 grand just in the time I've been talking to you in this post market session. I shorted Toll Brothers, TOL, JWN, and URBN into earnings, and they're all down. So I just wanted to kind of see what's going on there. So what I'm seeing in this New Zealand dollar, Canadian dollar, even though it looks pretty indiscriminate and all over the place, is a clear top right at the top here at this 98 price level, where prices shot to an all-time high, backed off the high, hit a new high, and now we have this M top. It's buried in, in all of this clutter, but this to me is the governing price pattern. So every time this thing rallies, you can short into it. Why? Because we know it's topped. If something's not going to go higher, over time it's going to go lower. Now this is an exotic pair that is mainly range bound, but I think it's going to start departing from its range. So in addition to this double top price pattern, we also have what I think is a head and shoulders. It's actually called a head and shoulders price pattern looks like this. We have a right shoulder, a head, and left shoulder, a head, and a right shoulder. That's like a traditional vanilla looking head and shoulders. This one is called a complex head and shoulders. Now, it doesn't matter that you know the distinction. It's just that there are many shoulders here. So here's the shoulders. This is the peak, the head. And then you can see there are many shoulders here. So there's just many of them. So, but, basically this is shoulder, head, shoulder. And this whole thing is a head and shoulders price pattern, which is a bear price pattern. There's nowhere for this thing to go but lower. Now you also have this confirmation in the form of this key reversal right here on a monthly. And this is when you're looking at a longer time frame like a monthly. If you've got a reversal after a month, I'm sure you can appreciate that reversal is going to have a lot more weight than if you see a reversal like this on a 10-minute bar. So people will immediately say, can I do this on the 15-minute? You can, but a 15-minute reversal is not going to have the same weight as a monthly reversal. So, so anyhow, so here is this reversal, which to my mind is pointing in the direction this wants to go in addition to all the patterns. So this to me is a no-brainer, is that you can basically go short here and put your stop loss right there. And so that to me is just a no-brainer in the FX space. You got a little, resistance here, and then you got nothing. This thing looks like a straight deal lower. So, this is, again, how I look at any trading pair. So you can see on the weekly, you've got this double top now. And again, you can see how pattern correlates to trajectory. After you had this pattern, after you broke the neckline, Once this thing punctured the neckline at 86, now you're trading 600 pips lower. And there's no mystery. That pattern equals trajectory. So, so C says, thank you for sharing this quick and valuable knowledge. Do you consider engulfing candle? So a lot of people look at candles, which is fine. I tend to just see the bars very clearly. So when I just look at a chart, you know, I start seeing a pattern coming together. And then once I see a pattern, then, you know, I start looking for these. Makes a new high, close on the low. 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 So I look at bars. You know, I'm a fossil. I'm a dinosaur. I look at, you know, to me, it's very important how something closes relative to the high and low within the context of the pattern. So I don't just look and say any reversal, I'm going to buy this or sell that, because, you know, we see these reversals all the time, you know, so this is where the market tricks you out, where you say, okay, but this is a key reversal. Why shouldn't this go long? Because you were buying into a pattern here. You're buying into a negative pattern. So pattern equals trajectory. You know, sometimes you'll get these fake outs. You know, here's a key reversal here. And you can see, then you go, well, why didn't that work? Because this is the directing pattern. So to me, I look at the patterns, and then I look at the trend, and then I look at the you know, the what I call the quality of the bar. How does something close relative to the high and low? And if I'm seeing that there's a resistance area, and then I'm seeing how all of these things are closing at the low of the bar, then it just builds a case. So it was like Schlumberger, where I saw this bottoming behavior, and then I saw all of these key reversals pointing north. In this case, all the key reversals are pointing south. And so it's a combination, it's a layered thing where, you know, it's one step on top of the other, where I look at, okay, what is the trend? Then is there a pattern? Then is there an insurance day bar? And then I confirm it with a sell stop in a market I want to sell, or a buy stop in a market I want to buy. So it's a four-step layered approach. I put my book in the thing here. If you didn't get it, I'll put the link back in here again. It's a pay what you want, meaning that you can determine whatever you want to pay. I'll put the link in here, and also in YouTube. And whatever you pay for it, I donate 100% to charity. Some Prashant says, thank you for doing these webinars, have always been immensely helpful. I wanted to check if a green bar, but lower than the last day in a downtrend, is still bearish or points toward. So PayPal, I don't know what you mean by a green bar. So I use blue and red. So I don't really care where inside bars, where they close on an inside bar. So you can see that you have a reversal bar here, where you make a new high, close on the low. And then, you know, this week you have this inside bar. So I don't really care. You know, if this inside bar closed on the high, I wouldn't really care. What I would do is I would just put my sell stop outside the low, and I would look for the market to confirm it. So meaning, if, you know, if the market starts coming back down, you know, and hits me, then I'll be put into the thing. But, you know, if on the other hand, you know, it opens next week and goes the other way, then I'm not put into a bad trade. So I put these trades in order to have the market confirm what I'm looking at. Scott says, I bought a Schlumberger this morning on YouTube. You are welcome. So let me see. How do you find the stocks you trade, or just read a chart? So, you know, I follow, you know, there's 30,000 stocks out there. I look at earnings plays. I look at a screener called FinViz. This is a, you know, a great screener where you can literally look at thousands of, you know, stocks. So this is FinViz, and, you can literally look at, multiple sectors. I'll just put this in here. And then you can go to the screener, section, hit screener, and then you can just look at any sector you want. If you want to look at consumer stocks, if you want to look at technology stocks, if you want to look at NASDAQ. You can just go through this, at your leisure. So now I can't get out of this thing. Ollie says, I'm late. Can you send me a replay? If you want to replay, just message our team support at thepatterntrader.com. They will also answer any questions if you remember or any other questions. Let's see. Tom says, as you're trading earnings, what do you decide to look for, whether it be bullish or bearish? So it all comes down to price, Tom. So today I did 3 earnings plays. Usually I don't do that many. I shorted Nordstrom's JWN based on, and this is, I put this, even before, where did I put this thing? I think I showed it. So I said I'm going short. This was the chart that I drew up of JWN before the close today, where I saw the double top. I saw this downtrend line. You can see that we hit exactly on the downtrend line and then reversed. And so to me, earnings are just a catalyst to send prices where they're already going to go, as indicated by the chart. So I have no clue what this company does. I had no clue, obviously, what they were going to earn. I had no clue how the market was going to react to it. I just thought that there was a good risk reward play here. Now, if you go, certainly short into earnings, you are, opening yourself to almost unlimited risk. So you've got to be very careful about that. And then I also shorted Toll Brothers. This is a home builder. And again, I just thought that Toll Brothers had a very negative price pattern. You can see that this is Toll Brothers. And to me, pattern equals trajectory. And to me, the earnings are just going to push this in the trajectory it's already headed. So you can see the double top here. Now this thing's got a kind of a funky head and shoulders. It's got this downtrending neckline. And you can see that there was all kinds of resistance up here. It just hit all as this wall and couldn't go through yesterday, last week, or the last several weeks. So I just figured this pattern, it's a downtrending pattern. You hit resistance, and now we're going to go back lower. So I just, to me, the earnings are just going to push things where they're likely to go. So you can see that stock closed at 45.63, and we're about $1 lower. You can see now Nordstrom is under 20 bucks. It's down to whatever, 15% in the aftermarket. And then the other one I did was Urban Outfitters. And I'm just making a bet that the consumer is basically tapped out, and I'm pretty much going to short most of these consumer stocks. So this is Urban Outfitters, URBN, same kind of thing. In a massive distribution up here. So, people were already getting out all the way up here. It's massive kind of double top. And this, if something is topped, it's only going to go lower. And then you can see we had this key reversal last week where you made a new high. So that is your risk. I mean, if I get short here, I can't see it going back up there. So to my mind, if something's not going to go up, it's likely to go down. This one's a little difficult because I always see how easy it is to plow through certain things. And, I thought this one was not going to be easy, but I shorted it nonetheless. So I just look at patterns going into earnings. But you have to be very, very careful. Very careful. You can get substantially burned. I remember watching this one technical analyst that I, respect very much on CNBC. And I remember right here on the dailies, there was So this is an example of how you can get really burned. This is a weekly, and so I think there was somewhere in here, whatever, but you can see how this went up after earnings. So you can literally lose all of your money if you're wrong. This is a ticker called Avis, and it's just an example how if you're wrong into earnings, you can get cleaned out. So, but this was a market that was headed up. So, there was no reason to short it, but I was actually watching a technical analyst who suggested shorting it at 180, and the thing went up and made a substantial new high at that point. So you got to be very careful. David says, I have one question about the bars. If after a pattern went through the neckline and we have two bars at exact same length in the prices, would this be like an inside bar? If you want to give me an example, Dave, I mean, I try and make it pretty simple. It's either it is or it isn't. Sometimes bars sneak out, but they encompass most of the bar. So you can, make a case they're inside bars. So to me, I just look for a coiling. It all starts with, is there a pattern? Is there a trend? If there's a trend, you just hop on board the trend. If there's a pattern that indicates a reversal of trend, then I look for a key reversal, an inside bar, or something that then gives me some corroboration. I'm trying to, let's see. I was looking at, so here is the pound yen. And I'm kind of on the fence as to which way this is going to break out. Should probably break out to the upside. So this is the pound yen. And you can see we're in this perfectly formed symmetrical triangle. So we could continue banging around here, but eventually this is going to come out the business end of this thing. It's either going to break this way or that way. I don't really care. I'm just going to hop on board. And so you can see how we're just coiling. That literally the last 3 weeks, the trading range has been within the trading range 4 weeks ago. So we are just coiling. And the more you coil, the more you build energy, the more you're going to rip out of here one way or another. Kind of feels heavy. Kind of feels like this thing wants to leak out this way. But, we'll see. So this is what I look for. So that is an inside bar. And so, you could kind of, this one's a little bit dangerous. Sometimes I could say, you could put a buy stop here and a sell stop there and have and this thing's going to break either way and you'll be put in. And even if you put in the wrong way, if you get stopped in, it comes back to unchain, you get out. Usually if you get stopped in here, you can more than make up for it. So there's a way that you can actually look at these things. But what I try and do is try and size up the pattern. So this is in an uptrend. This really should break out to the upside, but it looks like it's losing steam. So you can see these are a cadence of lower highs. And so this thing looks like it could be losing steam to the downside. You can see there's kind of a double top here. And so I'm kind of watching that. So that's an example of an inside bar. So when I'm a little confused, I go to a higher time frame and kind of, see, okay, what can I see on this time frame? And so again, a little bit ambivalent. This is still very much in an uptrend. And if you're unsure, then just don't do it, right? This thing still is, in this channel. It could well bang the underside here and then, go this way. So, but right now we've got a bit of a double top on the monthly. And then if we start, coming under 155, this thing, could leak that way, but we're still in an uptrend. So usually I pride myself that I could figure it out, but I could make the case both ways for this. This does look like an uptrend. It started out with this inverted head and shoulders. We're in this channel and probably should buy the lower end of this channel at some point. So even if you get a breakout, it might be a fake out and then you get one of these or not. So this is still something that, and I hate trading currencies in August just precisely for this reason. They get into these things, these ranges, and that's all you get. But this does seem to have a descending cadence to it. This does feel like a descending triangle. And so we'll figure out one way or another if this is going to break to this side, it'll go that way, or it'll trap you and go that way. So, you know, what I tend to do is exactly this. I put my boundaries around prices and then simply watch where the prices go. Just surrender yourself to whatever the outcome is going to be. I'm just going to ride this, whatever it's going to be. And the market will tell me. If we start re-challenging this, it's very likely we're going to go lower. But sometimes these markets suck you in, they get you a little trapped, and if it starts coming out the other side, then it's going to go the other way. So, but right now, it's just in this thing. Why, you know, even trade? So this is what I say, you know, I'll trade every market, but I won't trade a sideways market. So this is going to break out one way or another. It's going to offer a great trading opportunity, but it's not there yet. Coming out of a coiling pattern, how do you discern if a fake out is the real thing or the breakout? Ah, that's a good question, Tom. You know, there were several trades last week that really had me going, whether, you know, were they breakouts or fake outs? Restoration Hardware, the semis, and this is where kind of you have to look at the big trends, right? So this was the SMH, which is a very important component of the stock market. It's the semiconductor ETF. So like NVIDIA, AMD, Micron, all of these companies are in this ETF. And so what I was looking at last week was a breakout of this ETF. You can see that we broke out of this channel. So Tom, you know, I was asking myself the very question right here. Was this a breakout or a fake out? Now I'm still very bearish the stock market based on prior patterns. And so I'm, you know, very hesitant. And then, you know, also I looked at this rally. So you can see every single week we close at the high of the week, 7 weeks in a row. And so this to me smells of a short covering rally where they just trap you and they do not let you out. You know, one of the worst things to do is to get short into a short covering rally and then wait to get out, and they never let you out. They literally will suck the life out of you. And so, but to me, you know, the cadence of this, as well as the prior patterns, still looks like this is a double top, a head and shoulders, and the patterns still look very bearish to me. That basically you just came up to this neckline, and I think this is a fake out. And you can see that this key reversal bar, so, you know, sometimes if I don't know, I let the market tell me. So you can see the market told me it made a new high last week, close on the low. And so when you see that, you can see that made a key reversal here, made a key reversal there, made a key reversal there. And so these bars actually point in the direction the market is going to go. And so I think we are going southward. Restoration Hardware was another one of these, Tom. Same thing where I was looking at this thing broke out. The long-term patterns were still negative, but you never know how far these breakouts could go. And so this is RH, Restoration Hardware. I have all of their furniture in my house. It's a really great company, but that doesn't make any difference. You can see here was a rounding top. And then you had this channel where it was just neatly conforming to this channel. And you could see that we were starting to come out of this channel here. And I told our members right here at 270 that this is a buy, that we're going to have a short covering rally. And I had the price target at 330 and it went to 338. So I made a whole bunch of money on this run, but I did not think it was going to sustain. So there's a different thing, you know, between a short covering rally and a rally that, you know, is real and it's going to sustain. So I had a feeling this would break out and then burn out. So you can see we had this key reversal last week, and I'm surmising that Restoration Hardware is coming down again. So you kind of have to understand the bigger patterns, right? So here's the big head and shoulders. Yes, you did fake out, but this is to me the guiding pattern. So Tom, it's a function of understanding the cards you're holding. And so the markets make all of these micro moves and counter moves, and I will play what I call a counter trend play. So this is counter to the primary trend. So there's a lot of money to be made on these counter trend plays. This went from $200 to $340. So it was a 50%, a 60, 75%, move. You can make an enormous amount of money on these quick things, but they're not going to be sustainable. So you have to understand the difference between, a counter trend and a trend trade. Prashant says, do you ever wait for a retest of support resistance before? I'm aware of these levels. I don't say I trade based on patterns and price action. And then I'm aware once it gets to certain levels that it's going to respect certain levels. When you get to certain areas like this, it's no secret why this bounced here. You can see it came exactly to this post-pandemic. I mean, look at that. So there are certain levels where the market will respect those levels. So I'm certainly cognizant of levels. I'm cognizant of, trying to be cognizant of everything. So I'm trying to, see the direction, the pattern, the price action. I'm trying to get in sync with all of that. Sometimes I'll just take a move for a day or two just to take a scoop out trade. Sometimes I'll just, take a trade for a few weeks. It really depends on where the markets are. So what I really appreciate you guys is letting me know how you received this information. I typically have done this in 3-4 day increments. I've moved this to 2 days. I'm not sure how that works. I'm not sure if you're receiving this information and understanding it. But I would, really appreciate if you could leave me a review one way or another. And then if you're considering doing anything with us, you can also see what others have had to say. So don't take what, don't take it from me. There are almost 300 reviews in the Pattern Trader. This is by Trustpilot, so it's independently verified. We cannot alter whatever you say. And so here is the link to Trustpilot. And I would really appreciate you just go to this link and write a review. And I'd really like to understand how you received this information. And again, you can also, if you're considering doing anything with us, look what other people have said. After this webinar, I'm sure one of our team members will reach out to you. If you want to join our elite program is, I send out an email every day, and basically, I'm trying to. So this was an email that was sent many moons ago. I think I shared it with you yesterday, where I was shorting Zoom, since it was a $600 stock. So you can see in this time frame, almost a year ago, Zoom was 3 times the price or 4 times the price of what it is today. And I've been shorting it all the way down, advising our members of the bear patterns. And so this is the kind of format that you'll get if you sign up with the elite, where I show you the patterns I'm looking. I talk about the price action, the key reversal, and then I, put it, a specific trade. Now, most people will always just focus on this trade. And this isn't what I'm trying to do. My objective is to share with you the information and the knowledge so that when you see this setup on Zoom, or you see this setup on Schlumberger, and you see the same thing in the Euro Yen, you'll know what to do. So it's really what I'm trying to do is, convey, information and education. So, you don't have to rely on anybody, including me. Bruce says, is it time to buy the SQQQs? So the SQQQs are an inverse of the Qs, which is an ETF that tracks the NASDAQ. So basically, if you buy the SQQQs, you're betting on the downtrend in the NASDAQ. Now, I do think the NASDAQ is going to go down. This is, the SQs are a funky chart. So sometimes I look at charts for what they do as well as what they don't do. So now, again, this is an inverse thing, and it takes sometimes it takes people a while to wrap their understanding of this. So an inverse means that if this goes higher, it means the stock market will go lower. And actually, it's a triple inverse. So if the NASDAQ goes down 1% in a day, this thing will go up 3%. So you get 3 times your bang for your buck if you're right. If the market goes down, this will go up. So now the way I look at this SQs is that if I just opened this up, I'd say this actually looks pretty bearish. This looks like kind of a, big double top. And this thing should go lower, right? It's kind of sitting on a ledge here. And basically, it should go that way. And so if this were to go down, it would mean that the market would go up. The NASDAQ would go up. But, so I started looking at a chart as to what it is doing versus what it should be doing. So it should be going down, but this thing looks like it's turning around. It's got kind of this U bottom. And now it's kind of going the other way. So this one is kind of a hard one. It's just too nuanced for me to explain. But it's an inverse indicator. So what I saw in this thing was you could see how narrow this got. So you can see sometimes these markets, they get, into areas where you almost have no risk anymore. And this is the optimum thing for trading, is to wait for a pattern to mature, to get to the business end. This is what I was talking about, the pound yen. When it literally, gets to, you can see how these two, price things meet. And now there's like no risk. If you bought this here, you had your stop loss there, you've almost got no risk for who knows what your upside is. So this thing started to break out of this thing, and it just feels like you're going to keep going north, which means the market's going to go south. But, by and large, this still looks bearish, which means that, this could stop and then go back down. But so it's a little bit hard to look at this. The way I'm looking at the markets is I still think they're going to be very negative. We've got a big end of the week program with Jerome Powell. He's at this symposium called Jackson Hole, and at 10 a.m. Eastern time on Friday, he's going to make a statement, and the markets are going to rip one way or another. He's either going to be more hawkish than the market price is in, or more dovish, or what have you. But, I'm looking at the NASDAQ through this megaphone top. You can see that every time it hits these reversals, it then sets it in motion for another move lower. So, now we have to see, how does the market respect this thing? Does it start coming out here, or does it start going back down here? I still think that we're going to take out these lows. Not too many people in the market feel that way, but I do. And we'll see what happens. So you can see that we've been trading in a very narrow trading range for the last 6-7 weeks. We started a break cadence with this trading range. And, I think that we may get a retest up here, and then, something like that. So it's going to be very tricky in here. So this is what I do. I just set up these two lines and then watch how this market respects this. So if we start coming back down, this will start telling me that this, is respecting what I think it is, and it's going to go back down. On the other hand, if we start coming back up and start going through here and start departing from this, then it'll tell me. So if a market's not going to do one thing, it's going to do the other. So, but I just look at this through a pattern. There's numerous patterns here. And to me, I still see this as a top and a head and shoulders. And basically, you know, all we did was come back to this neckline. So sometimes these markets will break out, they'll retest the neckline, and then go back in the direction as indicated by the pattern. So I still think on balance, there are several very bearish price patterns here. And I've made some very bearish bets based on a number of bearish price patterns. So you have an ascending broadening thing, you have a double top, you hit exactly where you were supposed to. Now you could have one more peak up here and then fail, but I think this should be it. You know, if, you know, on the other hand, the market starts coming through here, then if the market's not going to go down, then it's going to go up. So it's that simple. So I just feel like this is a very bearish price pattern. And typically what these price patterns tell you is they return back. So I'm expecting, you know, the Qs to go back to 240 at least, and probably a lot lower. A lot of people, you know, there's not too many people saying that, but to me, the charts tell you, you know, a very different story. So if you do the daily Q, went through the resistance line, how do we join the elite? So Jibril, thank you for asking. Our team member will reach out to you after the webinar. I'm sure you'll get an invite to get into the queue and speak with one of our team members. In order to sign up for the elite, there's nowhere on our website. It's really a limited program. We don't really open it up to everybody. It's not available on our website. But thank you for asking that question, Jibril. And one of our team members will reach out to you. And if they don't, just message our support team and say you're interested in speaking to somebody. Bryce says, will you also be training elite members options as well? Most of us don't have the capital to buy expensive stocks. Well, if you don't have the capital to buy stocks, then, you know, options are very risky bets. You know, I very often lose 50% or 100% of my option bets. And that's why I don't do an option trade unless I can make at least 3 to 1. So I made 3 to 1 on my Schlumberger bet, but it has to make up for all my bad bets. So, option trading is, very hazardous to your health. And yes, you do get to put smaller amount down, but you also, risk losing all of it. So you really can't control your risk very well. And for that reason, I only do options when I see that there is, a sizable bet to be had in a quick time frame. And to me, I don't claim to be an options expert. I don't study gamma or delta or theta. To me, I buy options based on what I perceive the underlying. So meaning that I perceived that the underlying, in this case, Schlumberger, was going to make a move. So it was kind of an arbitrary bet, in terms of the time frame, in terms of what strike price to pick. These are kind of arbitrary things. I went a little further out. Typically, I only go 1 week out because it's much cheaper if you go, 1 week out. I went 2 weeks out, so you pay a little bit more. So yesterday, I bought these 38 call options for 88 cents, which means they had to move to 38.80, by 2 weeks from now. And you can see they've already exceeded that. So, but I bought the options based on what I was looking at in Schlumberger, what I call the underlying, right? Options are called a derivative, and the stock is the underlying. So to my mind, this was a cheap stock price. You could have, bought this for whatever, $36 yesterday, and today it's 39. But really, whatever you decide to do, what I'm trying to do is give you a way of looking at the markets. This really isn't I don't claim to be a money manager. This is not a Forex signal provider. I don't tell you what to do or how to do it. I'm just sharing with you information and then giving you ways to set up trades based on your own risk reward capabilities, based on your own, individual net worth. Everyone's going to have a different situation, but this is entirely about the information. And you have to, figure out how much is that information worth to you. To me, information in this world is worth everything. That's why Google and Facebook are the most valuable companies on the earth, because they control information. Tom says, when you trade options, I usually just buy naked puts or calls. Sometimes I do, hedge plays, Tom. But usually I do it if I see that there's going to be a move one way or another. All right, guys, I'm going to leave you there. Thank you for tuning in. Please leave me a review to give me an understanding how you received this information so that maybe I can do a better job next time. Simon on the YouTube says, do you trade indices and commodities? I trade everything, Simon. As long as it has a price, a high, low close, I don't care if it's corn, wheat, oil, gold. If it has a high, low close and a pattern, because markets really are a discounting mechanism. Markets are ahead of the news. Markets reflect, fear and greed. And every market is, the same. It's a collection of people buying and selling. And based on that collective behavior, we can see, is the market going down or is the market going up? And I just try and surrender and, hop aboard so that I can take out these moves. I'm just trying to get aboard, a move. So Red says, Mark, I've been following you for a while now, and your predictions are 97% right. I don't think you're right, Red. I don't think it's that. But, you don't have to be. That's the whole thing. I made 300% today on this trade. So if I go and mess up a whole bunch of trades tomorrow, it doesn't matter. It's not how many trades. It's the quality of your winners versus your losers. I try and take, much more money out of the market than I lose. Yesterday I talked about this concept of having a 3-to-1 risk reward ratio. So if you're trying to, risk $5 in the stock market, you should have a minimum target to make $15. If you're, risking 4 to make 3, over time, you're just going to get, whittled down. And that's what most people are doing. Tandre, you're welcome. Michael, you're welcome. Douglas Nasser says, can we get a recording? Yes, just message our support team, support@thepatterntrader.com, Nasser, and they will give you. M says, thank you. I'm new. This was very well explained and informed. So thanks for that. Rene says, thank you. Appreciate the teaching. You're welcome. Nevin, you're welcome. Let's see. When is your next webinar? I don't know, Dave. Couple weeks. Rich's, thanks. Well explained. Thank you for a lot of great information. Eduardo, thank you. I don't think I'm Jesse Livermore, but I appreciate the I wish. Thank you very much again, and write your review. Thanks for the SLB trade, JP says. You are welcome. All right, guys. Have a great one. Happy trails, and we'll see you. Ronnie, you're welcome. Whatever you decide to do, hopefully we'll join up again on our respective journeys. I'm always around. I love trading. I love the markets. Hopefully it shows. And, I've learned a thing or two along the way, and, I just want to share that with you guys. So whatever you decide to do is your choice. Take care. Thanks, Dwight.